23,350 mark, not looking good at all on that front. But let's interact with Krishna Sanghavi, the CIO Equity at Mahindra Manulife MF, joining us. Hi, Mr. Sanghavi, thanks so much for joining us. First up, give us your sense on what the Q3 earnings have been like to you overall, even from the banking space and non-BFSI as well. Tell us what you make of these earnings in a snapshot, because before the earnings season, when we spoke to a lot of people, a lot of experts, they were all saying that this earnings season can be expected to be rather subdued. Has it been all that bad as much as the fear that was there in the market before the season? And what are you making of the Q3 numbers overall?
Yeah, I think, as the saying goes, all evaluations to be done vis-a-vis the expectations. So as you clearly said, expectations were a bit muted ahead of the result season. Yeah, Q3 has come out to be reasonably better vis-a-vis what was expected earlier. And where you clearly identified, BFSI versus non-BFSI as one variable. And within non-BFSI, I'll possibly say, non-BFSI, non-commodity as one space. So, and the other, core consumer segment of the economy. So, moment you remove, BFSI, which is the lending piece, and the commodities, which is, again, one more, raw material input for the basic economic activity. I think the rest piece is good. So, broad picture, I think around 15% odd earning growth is what we are seeing on this 380 odd companies of NSE 500 having declared results. BFSI is leading the pack. That's been the story actually for last, maybe 4-5 quarters. The best earning growth has come from BFSI. Around 22% earning growth from BFSI. The non-BFSI is in a way muted, but within non-BFSI, if you segregate the commodity piece and then, the non-BFSI, non-commodities doing pretty good, nearly 20% earning growth. So on the whole, yeah, the result season is actually quite better vis-a-vis the muted expectations which were running ahead of the result season.
Right, Mr. Sangvi, let's stay with the earnings then. Like you mentioned, BFSI is a pack that has done pretty well for itself. Let's talk about commodities, that have been a drag, whether it's cement, whether it's infra, the earnings have been a drag. In fact, last quarter also, they were a major drag. Do you see the earnings improving? There's some sort of a re-rating happening in the sector anytime soon?
Sure, I think the core story for economy will remain the commodity companies, because we are in the building phase for the economy in terms of capex creation, infra creation. So to that extent, yes, clearly commodity companies, whether it's cement, whether it's metal, they're going to play the role. They do undergo a little bit, for the size of balance sheet they run and the size of scale, maybe operating leverage, financial leverage sometimes hurts them in a quarter or two. But the broad idea is, yes, on a going basis, our core thought process that India will start increasing its share of manufacturing. And, for that manufacturing piece to pick up, we will need, our own supply of metals, our own supply maybe of, cement for infra creation. So broadly, I think that should play out is the sense.
Okay, and Mr. Sangvi, when I take a look at your top holdings when it comes to the large cap space, I see trend that looks rather interesting to me in that portfolio because of the recent fall that Trent has seen post its earnings. Also, you have competition coming in from online platforms. You have Sheen that's been making an entry. Trent has been suffering quite a bit. Even if you cannot get stock specific with us, give us a sense of what you are making of this entire online versus offline retail space and the competition that's heating up on that front. And do you think something like a Trend or, for example, a big box retailer like an Avenue Supermart has more legs to the rally going ahead?
Yeah, so the India economy, we need to split into one macro variable, which is saying how organized industry is taking share away from unorganized industry. So that's a one piece. After that, possibly one gets into online versus offline. Clearly, online is far more organized, but within offline there are large players which are as organized as what you can be. So the big picture is clear. India is a consuming country, 140 crore population. Each of this, person in this consumption chain has their own, requirement, whether it's a apparel, whether it's, a staple, whether it's automobile, etc. So in the retail space, that way looks interesting space for from a consumption perspective. And yes, this set of players can grab the market share of existing consumption, from unorganized channel, and more brands, better the flavor should be the reason to buy the stocks.
Mr. Sangvi, I need to get your perspective on the broader markets then. If you look at Nifty, the 12-month forward PE for Nifty is below 20 times its 5-year average. And if you look at the small caps and the mid caps, they are still, despite the correction, they're still trading at a premium. Do you see more valuation comfort in large caps right now? And perhaps that would probably prompt a portfolio jig or an inclination towards the large cap names this year?
Yeah, I think those broad trends of Nifty valuations being far more attractive vis-a-vis mid and small has been playing out for nearly last 9-12 months. It's not really surprising because we coming back from last 2 years of reasonably strong outperformance by mid cap and small cap, and as we know, quite a bit of those gains were led by valuations gains and not so much by earnings. So to that extent, yes, the Nifty as a large cap index representative is trading reasonably valued vis-a-vis mid and small. So to that extent, incremental investing opportunity lies there. One challenge on large cap investing possibly is large amount of FII selling, while mid and small to that extent has strong flows coming into support. So yeah, flows are right now
A new fund that you are launching as well. Could you tell us a little bit more about this fund? I understand this is a value fund, NFO. Tell us a little bit more about this and what is the approach when it comes to this fund?
Yeah. Yeah, we launched Mahindra Manulife Value Fund last week, and the idea is to invest in companies offering value zone. It is an NFO offering. The way we look at markets really is that there are companies which are structurally in their own good business cycle momentum, but the current valuation may or may not reflect those things. Either it's because of current earning being partly, let's say, influenced by some temporary disruptions, or maybe price to book remaining good. The market is not in a mood to appreciate the company currently. We've seen this cycle in the sense that equity markets has multiple pockets, and there are occasions where some set of companies get extra optimism from market participants, and by default the color of money shifts there. And there are reasonably good quality companies still having their own business model in place, earning growth in place, but they typically being out of flavor from an investment market perspective. So idea is to buy those companies where we see value, where we see the companies maintaining their own earning growth trajectory over time, as well as creating a potential for a multiple expansion going ahead. So intent is to have a valuation re-rating as well as earning growth being captured by the investment approach in this fund.
Right, Mr. Sangvi, also moving on then, let's talk about the Trump tariff that has spooked the markets globally. In fact, ever since Trump has threatened a 25% tariff on aluminium and steel imports, of course, it has put a dent on the metal stocks, but also he mentioned the pharma pack as well. Now, a lot of Indian pharma companies, a lot of companies in India, they export to US, and US is a major market and a major chunk of sales for as far as the Indian pharma companies are concerned. I can see DV's Lab is there in your portfolio, but if the Trump tariffs go through, what is going to be the likely impact, because that is going to reduce the pricing power for Indian drug makers, because we supply drugs much cheaper than the US drug makers, and that's kind of a pricing power that Indian drug makers have.
I think a tariff, is something which has recently, come into financial markets attention in last 1 month, is more so with the change of presidency in US. It's clearly a new variable. It's something, which possibly, US government is trying to attract their own, attention to their own areas of current account deficit, and to that extent, they will keep on identifying areas where they would like to address. Coming to maybe any core supplier, perhaps let's look at pharma. Yeah, there are Indian companies which are engaged in supplying of either the actual drugs or the intermediates to US, and So as long as those companies have their own business model in place in terms of their ability to supply, in terms of their contracts, I think those companies will have inherent ability to pass on some of those tariffs. But yeah, clearly, finer details might be required before judging about which specific company may be impacted and which may not be impacted at all.
Okay, and Mr. Sangvi, before we let you go, just give us a quick sense of what you're making of the entire mid and small cap basket, because we've seen over the course of the last couple of trading weeks, every time there is a market fall, the mid and the small cap are taking it rougher on the chin than the benchmarks. Every time the market goes up, it's the mid and the small caps that are leading the gains. With so much volatility when it comes to the mid and the small caps, you also have India Wix that spiked up 6% as we speak. Tell us if you are seeing any safety, any comfort in the mid caps or the small caps, or would you just recommend large caps right now if that is a safety net perhaps that you're seeing in the market?
Yeah, you're right. I think volatility is quite high. Maybe part of the volatility is exaggerated by people through derivatives participation. But coming to core investment side of it, yes, as a macro thought, large cap is something which looks far more attractive from a valuation perspective. Within mid and small, while as a whole, as an index as a whole might look expensive, but you clearly are in a position to identify few pockets where value lies, few pockets where the growth is still attractive relative to the valuations available. So it's going to be a mixed bag, but yeah, macro level, yes, large cap offers far more value.
Mr. Sangvi, thank you so much for taking the time out and joining us with all those insights. With that, we'll let you go on that note. It's time for us to slip into a